Hi, I'm Stephen Ju, Portfolio Manager at Voya Investment Management. The recent volatile market conditions are mainly tied to concerns over higher inflation, trajectory of interest rate hikes, and whether tighter monetary policies from central banks can reduce inflation without causing a sharp slowdown in economic growth. We believe these concerns are now getting discounted by the market. Central banks have broadly telegraphed an upcoming series of interest rate hikes to moderate growth and slow inflation. While it is likely that tightening monetary policy and fiscal conditions will slow U.S. GDP growth, we believe companies and consumers are well situated to ride out an economic soft patch, given record low unemployment and healthy balance sheets. Although central bank policies alone cannot solve supply-side inflation, we are observing some gradual improvements in supply chain constraints that should help alleviate some of the cost pressures. Recent data points include freight prices starting to moderate, easing semiconductor and component availability, and reopening of the Chinese economy from recent zero-COVID lockdowns. Our view is that as central banks proceed along the stated rate hikes and economic growth moderates, inflation should gradually return to more normalized levels and market volatility should subside and return the focus to company fundamentals. Financial markets are likely to remain volatile given the worries over higher inflation, rising interest rates, slowing economic growth, and geopolitical tensions. We believe inflationary pressures should begin to ease as tighter monetary conditions slow down demand and supply chain constraints ease further as the year progresses. This should keep monetary policy adjustments and rate hike expectations more in check to avoid a prolonged economic slowdown. We believe the global economy should eventually stabilize and get back into expansionary territory, albeit likely at a slower rate of growth. With this complicated macro backdrop, investors have shown a preference for defensive sectors that have higher visibility of earnings. Looking ahead, we expect cyclical and other high beta areas will face some pressures amid slowing economic growth. We have moderated some of our cyclical exposure along with upgrading the portfolio in names that we believe can continue to grow profitably in the face of ongoing inflationary pressures and tighter financial conditions. While the financial markets are likely to remain choppy in the near term, we believe certain oversold areas could be in the bottoming process over the next quarter as their valuations are nearing historical ranges. The long-term business fundamentals remain healthy as enterprises are committing to multi-year digital transformation projects to enhance their competitiveness and drive sustained growth leveraging AI. Across the key dimensions of the AI landscape, we expect healthy demand for the ongoing build-out of AI infrastructure in the coming years. We are seeing AI get embedded into an increasing number of applications and systems to help make more intelligent decisions. We also expect to see more industries roll out AI projects across more of their operations to accelerate their transformation. We believe these trends will drive meaningful growth for companies that provide unique products and services across AI infrastructure, applications, and AI-enabled industries over the next decade. While we navigate through this volatility, we remain focused on investing in companies driving innovation and change. As we look at the ascendancy of some of the largest companies in the world over the past 25 plus years, we believe the single largest driver of their success has been the ability to innovate. We remain encouraged that the pace of technological innovation continues to advance at an accelerating pace driven by the adoption of artificial intelligence. Although the global artificial intelligence team was transitioned to Voya Investment Management in July 2022, there are not any material changes to the investment policy, team structure, etc. The research and trading process also remain unchanged. The team will continue to focus on identifying the companies we believe can leverage the ongoing AI innovation cycle to drive long-term shareholder value creation. We hope that individual investors will continue to invest in the fund from a long-term perspective, giving them many opportunities still ahead with AI innovation and disruption. Thank you for watching this video.